But I think for small business owners, like I think it's just really, really important right now to think very strategically about your next hire. What you're seeing is not this massive bump in unemployment claims. So that tells you that if there are a lot of people getting laid off, and we're not seeing unemployment claims, then these people are getting gobbled up in the open job market.
It's real, but I think that, to freak out one way or the other right now, it just doesn't feel like
it's kind of noise, right?
Right.
That's why I kind of set that out ahead of time. It's like what's happening in the top 7 stocks of the country don't reflect business reality a lot of the times. Welcome back to another episode of the Next Gen Strategy Podcast. I'm kicking this off today, and we really thought it would be nice to kind of do an episode about the current state of the market, current state of business. You see a lot of headline news all the time, and I think it's really hard to translate, the Dow Jones being at a high, and now that impacts a landscaper, right? And there's just all kinds of different little news kind of blurbs that come out. And I think today we're just going to pick through a couple of them and talk through them and how we see that relate to small business ownership and maybe what to think about and what to prepare for. Any thoughts on that, Brand, outside of...
No, I mean, well, I'll just preface it by saying that neither Tyler or I are like economists or anything to any nature. So we've done our best to distill some of these different things and do a couple of different areas. And so, we're going to do our best to just talk through some of these things and bring it a little bit maybe more down to Main Street from our perspective and also just incorporate some like the real time conversations that we know, our clients and folks that we're talking to are having about it as well.
Well, I think that's the important thing to think about is that a lot of this headline economic data is largely and predominantly driven by very large corporations.
Right.
So, what may be impacting your local community or your business may not translate in the slightest to what's happening at the largest companies in the world, let alone country, right?
Correct.
So I think that's the really the hard part is you see all this news about, we have some topics today about the market or unemployment or jobs numbers, and that just may not correlate at all, but we're going to do our best to kind of describe it from our lens. And I think the first one, as of the day of this recording, it's like May 8th right now, the market is this week hit some all-time highs again. When I say market, I mean, your typical index, S&P 500s, Dow Jones indexes, things of that nature, all the stuff that's on the big news. The beginning of the year was kind of a tumble on those big indexes, and it really shot up the last several weeks and month. And it's kind of a weird time right now because we're in the mix of kind of a war, the market hitting tops, gas prices are through the roof. It's kind of a weird time. Interest rates have kind of been stable. There's a Fed chair retiring, Jerome Powell. So, what does that mean, for, I guess, we put on here, like the next gen reality. And while, the market may be just booming, it really, a lot of times doesn't have a direct influence on a small business's economic outlook, unless you're somehow doing business with that supply chain of what is booming. From my understanding right now, a lot of the lift in those big index funds is, the Magnificent Seven, which is a lot of like AI software.
Your NVIDIAs, your Google, Alphabet, whatever you want to call it. Google, Alphabet, Meta, Apple, right? Like they're driving a lot of that.
Yeah, and the market is basically pricing in this expected significant return of what AI is going to do to the workforce and to profitability. And I think what's worth considering there is, hey, the market, a lot of what they always say, like you can't outsmart the market. It's a big, giant culmination of savvy investors, right? So the thing I think to think about as a small business owner is, well, how is that going to impact your business, your employees, and your individual market? What is all of this technological advancement going to do? I think that's the thing. If the market sentiment is that it's going to return an ROI, it might make sense for you too, because those folks are actually making products that are going to get used by large corporations, but also can be easily used by you, Google, Microsoft, Anthropic, OpenAI, those types. Thoughts on that, Grant?
Yeah, I mean, I think, and we'll cover this a little bit later as well, as just some of the implications of some of those tools. And it's not like, I think some people have maybe had this mindset of like their AI was just going to roll out all at once and everybody was going to be using it for everything. And like it was just going to kind of take over. And I think what we're really seeing is like some slow adoption within certain industries. We're in the professional services space, right? So CPAs and marketing, and this goes for IT, it goes for legal, it goes for any, human resources. Like, it's being incorporated a lot more into, maybe some existing tech stacks, things of that nature. I think one of the things that I just want to say from my perspective, and we'll kind of cover a little bit even in labor too, but like some of these bigger, what you would call your software companies, your software as a service company, SaaS is one that they talk about a lot. It's like there's a lot of uncertainty right now around kind of where those companies are going. I mentioned, before another, but that could be like your HubSpots, your Salesforces, Oracle, Intuit, like some of those different companies are really trying to, I think, figure out, what parts of our platforms and stuff are we going to natively integrate things to, and how can we better connect things. One of the things that I definitely want to just caution business owners on, and I know we've talked about this as well, and I'm trying stuff all the time. You're hitting stuff all the time, bumping our heads, but like, don't just go turn everything on and expect it to be right and expect it to be working. Unfortunately, like you are going to have to really spend some time with it. And, even for those folks who maybe are not necessarily in the professional services, might be in the manufacturing space, where obviously automation, robotics, those types of things have been going on forever. You might have an ERP system. You might have, your QuickBooks or your job costing connected to something. I think you just need to really, really make sure, and again, I don't want to get too far into this now, but really, really make sure that you have, the right system and checks in place, and not just, just trust what's coming out of things, because it can hallucinate. It can get things wrong. If there are other plugins into some of the software, like just be really, really constant, because I've already heard some horror stories of certain things that have happened. So I think, while there's a lot of investment happening at the top to what Ty is saying, there's a lot of stuff that's going on right now. I think it's still, at least for me, I'm still in that test and iterate. Don't ignore it, but test and iterate.
Yeah, a couple conversations that I've had recently, one of them was about Intuit. So Intuit's your TurboTax, QuickBooks, MailChimp. Yeah, MailChimp now.
Yep.
And the individual I was talking is works for a financial investment firm, like a larger one. And he's like, yeah, we had a big meeting about Intuit. Like, do we want that to be a part of our portfolio? And he asked me just as an accountant, and what's interesting is it's like, well, Intuit is trying to drop AI into all their stuff because like they kind of have a mandate from their investors to do that.
Correct.
But it's like, can they move as fast as like the actual AI businesses like ChatGPT and Gemini and Claude and those? Like, are they already outdated? And that's, I think, what leads to that conversation. I mean, I've said it a couple of times in the last couple of weeks. I'm like, will we even need QuickBooks in a couple of years? We might. I think you could say the same thing about any number of softwares, because just how fast some of these AI things are generating. And we are seeing more and more reality out of them than like I would if you had asked me 3 months ago. I'd say that's a little far-fetched. That's a little far-fetched. Yeah. And you're starting to see it. So does that, I'm making a presumption here, but is that what we're seeing kind of reflecting in the market? Is that we're seeing some of that lift because reality is starting to set in with these tools?
Yeah, and I think, one of the things that you've heard if you follow any of the earnings calls and stuff, some of the software companies that maybe have seen either stock prices staying the same in that SaaS industry, or dipping quite a bit over the last 6 to 12 months, is like they're still getting adoption. They're still increasing customer count. They're still from the call it the what you're going to call profit and loss or whatever, from their standpoint, but they're still gaining steam. But the drive down of the market value is really coming, I think, from some of this uncertainty and skepticism, because people don't necessarily know where it's going to be in 6 months from now. To your point, are there going to be a lot of acquisitions, mergers, certain things being siphoned off? So yeah, I think there's just not to go too far on this market stuff, but I think that's just kind of what we're seeing. And again, everybody, if you're a business owner, we've named you're using half of probably what we just named. So again, it is kind of what it is, but it's real. But I think that to freak out one way or the other right now, it just doesn't feel like
it's kind of noise, right?
Right.
That's why I kind of set that out ahead of time. It's like what's happening in the top 7 stocks
Yeah.
of the country don't reflect business reality a lot of
No.
the times. And a topic that does, kind of impact business reality is that there are some surveys that go around that ask basically small business owners like what their major number one fear is.
Yep.
And for like the last 5 years in a row, every business owner's like top ranked fear has been inflation.
Yep.
And that actually just flipped on its lid this month, or this most recent month, where now cash flow, the cash flow squeeze is edged out inflation, which is interesting. And I don't know if it's a telling sign of not necessarily like there. So there was another statistic. They said that there was like an 89% confidence among small business owners that they would grow this year. So you're like, how does that make sense if they're worried about cash flow? Well, I think that goes back to a lot of conversations we had. Is where like you can grow, like you can hit sales. Sales happened, but like how are you turning over it into cash? Who are you working with, and what payment terms do you have, and how is that flowing through? You can grow very well, but also suffer from cash flow issues.
Yeah, I mean, he just nailed it on the head. I mean, your business could grow 10 to 15%, but if your top line, if your costs grow 15 to 20%,
True.
you didn't grow necessarily. Or another thing, and this again goes back to the confidence factor. It just feels like we're kind of this odd spot. It's like maybe some of the cash flow issues is also coming from like maybe they are looking at this as investment opportunities, where maybe they're looking for they're being more aggressive with hires. Maybe they're being more aggressive with additional software. Maybe they've made a change in big capital allocations. So there's a lot of things I think to your point that could potentially like make cash flow a little bit less than normal, but it's just an interesting
cash flow is
scenario,
usually
I think.
a timing mechanism more than it means. That's not like disappearing paper profits. It's just more or less like, well, at the end of the month we ran out of cash, but our P&L said we made $100,000. Well, that just happens because of timing. But something's happening in the small business market that's coming forth, and not as high as this inflation feeling. Another big topic that kind of correlates when we're talking about AI, but this is like an interesting one that you've maybe thought of, but you're seeing like relatively low unemployment. I think it was around 4.3%, which like if you look back over time is just a healthy unemployment number. But then like all over the news is that AI is replacing people in swaths, and like there are layoffs everywhere. And like I said before, the news is talking about like huge corporations laying people off. But what you're seeing is not this massive bump in unemployment claims. So that tells you that if there are a lot of people getting laid off, and we're not seeing unemployment claims, then these people are getting gobbled up in the open job market, which is just interesting because I think this will lead to a conversation me and you'll have. But I think for small business owners, like I think it's just really, really important right now to think very strategically about your next hire and if you should hire that or not, essentially.
Yeah, no, I 100%. I think it comes down to the role and where do you think you see that role in 6 months to a year.
Yeah.
And even if you are making those hires, and I'm seeing this with multiple different companies right now, some are having conversations of like, hey, listen, we're going to hire you for these core functions. But we had to also be understanding of like, we may be in a little bit of a different spot in 6 months to 12 months. And I think that comes from a combination of like tools that are available, things that AI can do, and also just like some generational shifts in terms of like, there are a lot of people exiting the workforce from a retirement standpoint right now.
Yeah.
And so there's a lot of jobs and a lot of maybe duties and jobs that are going to need to kind of be like either distributed through folks. And so I think that's also maybe a little bit of a factor of this as well.
Generationally, how people work is different too. Yeah. How someone who may be leaving the workforce handles their job role versus someone who's 20 years younger than them. Not to say one's more effective than the other, but they look different.
Yep.
So you do see that a lot of this like natural attrition where someone retires and then like they're like, well, this is a good opportunity for us to split that thing up across 4 people.
Yep.
And I think I'm advocating for that right now. Like,
yep.
Depending on your industry, clearly, like if you're in an industry where it's like physical labor in, output out, like things like that, it's a little different. And you're probably familiar with the flows of hiring and layoffs, but especially professional services, really taking a hard look at job descriptions and what people are doing and what tools out there that you might be able to invest in that pick up some of that lift probably more important now than ever because we just don't like at this point. I have no idea how powerful some of this stuff is going to be 3 months, 6 months, 12 months down the road. So it has me very much being cautious of, especially like heavy admin type things, to immediately hire. And I think what you said was important though to think about. If you feel like you really do need to make that hire, I think during your interviewing process, you should be really thinking about, if I hire this person, their ability to pivot would be really important because I think that's what we're seeing too, is it's like, since the unemployment's low, even at the large corporations, like we're in aggregate, we're not seeing a reduction in employment. I think we're probably seeing a lot of pivoting where people are getting after things that create more value for the business,
Yeah. And I think that's, and I'm not going to say, you talk about professional services. I think we talk, there's also like manufacturing and the trades. So when I say this, take it for kind of what it is. But like, I think that there's a lot of opportunity, like when you are making these hires right now, to hire the intangibles and then train the skills up. I'm not saying that highly skilled workers are, something of the past and that they're not needed in some areas, but like this is a time where it's so important to have the folks that have the intangibles because the ability to gain skill and whatever you are doing is so readily available right now, or there are so many different tools that are now existing that can mask a skill gap that, I think is as much as we've always said, you should hire the person and make sure their culture fit and make sure, those different things. I think it's actually going to become even more important because if you have, a role that's traditionally been more of like, a button pusher or one of those things, like it is being in whatever industry you're in, like it is seriously being looked at right now every single time that there is any type of turnover or whatever. So just be really thoughtful about that. Like this person coming in your door, especially if they're younger, is probably they're going to be looking for advancement opportunities. They're going to be looking for like, okay, like how can I, I've got a skill set of knowing how to do some of these different things faster, better, differently, or whatever. So just keep that in mind. Like, I think that you got to be willing to be flexible and not look at what you did 5 years ago to this next person that's coming in.
I tell you what, I think it's a story as good as time, and I don't think what's happening right now is actually different than anything that's ever happened in the last 100 years. But we did it this year, just with the guests that we interviewed and places we went. Go into any business that's been open for 50, 60, 70 years, and you'll hear a story about like, well, over there we had 100 employees, now there's 3. Right. And because we had, you imagine we had a person here doing this step and this step. Now this thing does this all for us and then we have this one person who can oversee it all. So like from manufacturing to professional services to whatever industry you're in, I think there's a possibility we're going to see, just a little bit of a surge of these kind of elevating the workplace to where the jobs become less mundane and more skill-based across vast industries. Yep. So like when you think about that intangible hire, does that person have the ability to kind of upskill because a lot of the day-to-day grinding stuff may go away in a way we don't even know yet or can process because it's just from when Ford did the assembly line to now, that's kind of been just the natural revelation of technology.
Yep, 100%.
The other hot button issue everybody's talking about is paying $5 a gallon for gas or oil and how that turns into gas prices. That's beyond me, right? But like, obviously that has a lot of influence because of the conflicts that are going on overseas. But I think it was important to take a beat here to be like, what does that mean for small business? Well, a few things. I mean, you never know. The IRS might come up and really bump the travel mileage reimbursement. We don't know if that'll happen, but that very well could because of that. The other thing is just paying attention to if you're a type of business that goes through any level of significant energy, and I'm not even just saying gas, but I'm saying all of the above, electricity, natural gas, propane, vehicle gas, all of that. Are you baking it into your, like, are you going to react to that and put it in your pricing? Or are you just going to eat it? Like, what are you doing? Because like a lot of industries will have like surcharges and they're kind of protected, but a lot don't. I mean, many don't. I mean, think about anybody that just does basic amount of delivery. So that, I mean, clearly if that's you, you've probably already been having these conversations, but I find that tricky because what if it's back to, $3 a gallon a month from now, and did you change all your pricing permanently, Well, you got any thoughts?
No, I think, that's definitely more your world too, just in
Yeah.
terms of planning those things. How do you have those conversations? I think it also depends on like, I'll give you an example. Like if you're used to buying things in mass,
Yeah.
maybe potentially now is a time where if you've been kind of 50-50 on like, do you increase inventory availability? Do you reduce the amount of trucks that's coming in? Are you paying a lot on the freight side? Like, maybe if you're on that side of it, it might be a time to kind of look at that. And if you were kind of leaning towards like maybe doing expansion or something like that, again, if you have something that is highly energy dependent or highly dependent on trucking and stuff, how do you optimize for that? And I don't think there's a clear answer, but I think that there's a lot of considerations. And I think honestly, like depending on who your customers are, like they're probably expecting those conversations to be coming at some
It's kind of
point
no
in time.
different than the tariffs.
It's
like
right,
it kind of
right.
goes in line with those. We still have, I think, some significant tariffs on metal parts, and that's still making a big impact. And kind of the same problem is like, how do you reflect that in pricing? You're seeing it from your suppliers, and then how's it trickle down? And it just makes for not fun conversations, even though economic outlook's good. Another one that I found really interesting, and like I can actually kind of confirm this just from what like I've seen, is that there was some polling done and some surveys done and studies about what's going on with kind of capital for small businesses, lending primarily. And there's like this huge shift of a lot of small businesses are not getting capital from banks. Like traditional, your bank down the street, walking in, shaking hands with a lender, showing them a P&L and getting financing. Like that is like just taking a nosedive. One big one that people would utilize is SBA financing. So that's federal financing. A lot of times that still happens through a traditional bank, but what we're seeing is this huge crop up of online lending programs. Even on the SBA, like you go through a full SBA process online through someone who's pummeled a bunch of marketing spend to get you to click it first on Google. And then like you can't even log into your own QuickBooks right now without them offering you a line of credit right up front. I mean, just how the consumer market's blown up with the the Affirms, the pay-as-you-go, all these pay-as-you-go. It is like infiltrated small business too, and we're seeing this uplift in this online non-bank institution lending, which is very interesting to see. I think my first word of caution and issue with it is that essentially that's softening the scrutiny you as a business have to go through to get access to debt and capital. The one part that's really nice, although it is annoying to go through the process of getting debt from a bank, is they kind of make you sweat it out and prove that you're going to be able to pay it back. And like they're interested in you getting that capital and making money off of it because they want paid. A lot of these other establishments are about, we'll get you paid in 15 minutes. And you don't have that double check there of someone, honestly, with probably a pretty good financial acumen, looking at your numbers and thinking if it makes sense.
And I think, and you correct me if I'm wrong, because this is much more kind of your world, seeing these financials and stuff. But, let's take an Intuit, for example, right? Like, it could be a loss leader to a certain degree for them, or like, hey, this is a thing that we'll offer if it keeps you on our platform more or keeps us in front of you. So like, banks and stuff, I mean, at their core of what they do for business, and banks are a business, looks a lot different than a Amazon or an Intuit that's offering financing. And they're just like, I mean, it's just another add-on, another way for us to, keep you as a customer, keep you in a platform. And
you could draw that same line to a lot of people who their business is to work with direct consumers. Think about your roofers, HVAC, that type, whoever are selling a very expensive product to a consumer, usually work with banks or lending institutions to offer financing to their customers. Because what does that do? It improves their sales. It improves their ability to get paid. Because this is a thing, a lot of people like need a new HVAC unit or need a new roof, but they may not have the cash at that moment. So they're partnering with that to do that. So you take like a QuickBooks or an Intuit, well, they're so large that they could just have that arm internally, and it's part of a marketing effort and a benefit. And I'm not saying don't utilize them if they have attractive rates, but I think what I'm saying is just, broadly speaking, we're probably increasing access to credit without necessarily due diligence into figuring out if that is going to be paid back through profits or not.
Yeah.
You know.
Well, and I'm always, and just a personal opinion, I'm always an advocate of utilizing local banks
Yeah.
as much as you possibly can, because the relationships do matter when you're talking to these people and you're trying to, you like you mentioned, like walking through the business plan, how these things going to work, what opportunities are there, is there flexibility? I mean, you don't get that as much with these huge institutions who see you as a number. So again, to your point, if the rates are attractive and you're able to figure out something that works great for you, great. But at least just for me, like I kind of like the local personal touch a little bit.
Well, I like it as like you don't think about it. Sometimes you think about it as combative because you want the money and they're making you jump through all these hoops. But I'm like, that is just another financial person in your life who's gut checking some numbers. And that's, if they think it's a bad deal, maybe it's a bad deal. Like have that in the back of your brain that if they're not willing to extend that money to you, because that means they don't think you're going to get an ROI out of it and be able to pay them back. So just putting it out there because you're probably seeing it a lot as a business owner, like all this access to capital kind of situation. You probably get the spam emails. I get them all the time. Like fast cash at 90 days, this and that. So put it out there. And then one of the last ones we have here, this one came across my desk a couple weeks ago, and it's a to-do item for me, but basically there was I think it's pronounced Kwong. Basically, there's an IRS case, Kwong case, that basically the courts ruled that while we had like we had the federal disaster announced because of COVID, which was like basically like a 3-year span. I think 2020 through 2023 was like the official length of time it was declared a federal disaster. The IRS may have been charging and assessing penalties on taxpayers, and usually you're not supposed to be charged those penalties in the event that it's a federally declared disaster. Normally this happens, you'll see it every once in a while where it'll be like, oh, they had fires in California, that's a federally declared disaster. Those people don't have to file their tax returns until 6 months later, and they face no penalties as a result of that. Well, they made the case in this court argument that COVID was that exactly for everyone, and it landed. So this is a thing where if you've been assessed those penalties, they're not just going to like run and bring you your money back. There's actually a form that needs to be filed by the middle of July to claw that back. The most realistic reason why you would have this is like if you had a year where you just didn't pay your estimated payments up as much as the IRS wanted, and there was some sort of penalty there as a result of that. Or if you actually were in a situation where you're like got on a payment plan and you didn't pay all your taxes or something like that, those things are there. I mean, even like failure to file penalties during that period. So from my understanding, the number is like a ridiculously high millions and millions of dollars number that would have to come back. So like I would double check with probably your CPA to make sure you didn't pay any penalties and see if they could throw that form in. Like I'm going to go through a bunch of my records to see if there's anything out there, because it's just a simple form that you put out that gives you like more time to actually go claim the money back. And I thought it would just be important because like it's very normal and easy for people to have small penalties on their return. Like I said, if you were supposed to pay in 20 grand over the year and you paid in 17 and you did a catch up at the end, you might have a small penalty on there. You might be able to claw some of that back, but who knows? It could be very large for certain folks.
Yeah. Yeah, that was an interesting one. The one you had told me about that even off camera. So yeah, definitely just something to ask your CPAs about.
Yeah. So that's pretty much kind of like the Wall Street to Main Street kind of news cycle. Hopefully it's not too dated and the market's not like in the dumps by the time this thing comes out, because it very well could be, but the same applies, right? Like if you inverse this whole thing, you could have a very strong local small business outlook on because AI wasn't as good as people thought it was and the market tanks, So that's pretty much all I have for this episode. Grant, anything else to add?
No. We're just we're gonna have one more episode after this coming up as a recapper of the season, and then we'll be taking a little bit of a break and getting ready for season 3.
Absolutely.
So, until next time. See you later.